Hello, what's up guys, it's Kevin the trader here, and today we're going to see the range of markets that binary options allow. So binary options allow you to trade on a wide range of underlying markets. One of the advantages of trading binary options is that you are not buying or selling an actual asset, only a contract that determines how that asset performs over a period of time. This limits your risk and market and make it easy for anyone to start trading. So with binary options, you don't trade an asset, you only trade on contract that determines how that asset performs over a period of time. Okay, now the available markets on binary option is forex. So forex is major pairs, minor pairs, and smart FX indices, while stock indices are major worldwide stock indices sourced from OTC market. And then we have commodities for all four precious metals plus energy. So we don't trade on commodities here. So synthetic indices that mimic the market volatility. So this channel we are looking at the forex markets and the synthetic indices that mimic the market volatility. So that is what we'll discuss on this channel. Mostly will not touch about stock indices or even the commodities, okay, but mostly is forex and mostly synthetic indices. Now with the forex, so what is forex? Forex, you trade popular major and minor currency pairs plus smart FX indices. Most of the YouTube channels deal mostly on forex, so this is what they do. Okay, so in forex you trade more the popular major and minor currency pairs plus smart FX indices. Okay, weigh indices that measure the value of currency against the basket of major currencies. Okay, there are four types of smart FX indices that you can trade on. So first of all, the AUD index. This is a Australian dollar index, the measure of value of Australian dollar against a basket of 5 global currencies, which is USD, US dollars, Euro, Great Britain pound, Japanese yen, and Canadian dollar, each weighed by 20%. So if you're trading on AUD index, you measure the value against USD, Euro, GBP, Japanese yen, and Canadian dollar, each weighed by 20%. The same thing happens when you trade in Euro index. Measures the value of euro against the basket of 5 global currencies, which is USD. It's just the same as this one, but now this one is euro. You're now trading euro against the 5 basket, which is each weighed by 20%. And then the Great Britain index, which is the same thing. Measure the value of British pound against the basket of 5 global currencies. USD, Euro, UD, Japanese yen, and CAD weighed by 20%. And then you have the USD. So the type of smart FX indices that you can trade on is AUD, which weigh about on this, then a Euro index, then Great Britain index, then a USD index. So we don't normally have a CAD, because in CAD they can still use USD index. So another market that is available is the stock indices. Enjoy exciting opportunity to trade stock indices with benefits of real-time charts and pricing. The stock indices in this binary.com are sourced from over-the-counter OTC market. OTC is over-the-counter market. The sources outside centralized exchanges. Please note that due to their OTC nature, the prices of our stock indices may differ from counterparts on centralized exchanges, and that's why we don't or will not trade on stock indices on this channel. And then we have commodities. Like we said, they're all four precious metals, which is gold, silver, palladium, and platinum, as well as energy in our list commodities. So the energy list include the petroleum, so we also don't want to trade on commodities here. And then lastly, we have the synthetic indices. Now, synthetic indices is the most kind of trade that we're going to deal on this channel, and this, apart from this one, we'll also do forex on this channel. Now, what is the synthetic indices? Binary.com's synthetic indices are synthetic indices that mimic the real market volatility and are available trading 24/7. Now, this is the best part of trading on synthetic indices, because you can trade 24/7, different from the forex exchange or any other market, because other markets you can only trade from Monday to Friday. You can trade on weekend, but in synthetic indices you can even trade on weekend. They are based on a cryptographically secure random number generator, audited for fairness by an independent third party. So you'll see what synthetic indices are. Now, the synthetic indices only mimics the real market volatility. Okay, so if the forex market has a volatility, then synthetic indices will mimic the same. Also, if the stock indices, commodities have volatility, the synthetic indices mimic the same. So that's why you can trade them 24/7, because you can mimic the market indices, the market volatility, even if you're trading on cryptocurrency. Okay, that's why you can trade synthetic indices 24/7. Okay, anytime you wake up, anytime you can do it, in the morning, in the afternoon, in the evening, at night, or you can do it even all of daytime or even nighttime, because it's 24/7. You can trade anytime you want. That's what makes these synthetic indices the best, and they are based on cryptographically secure random number generator, audited by fairness by an independent third party. So I'll also show you how the numbers work for synthetic indices. Now, synthetic indices gives you an exclusive access to various trade types, like such up and down, like we saw yesterday, or we saw in the last video. We have touch or no touch, in and out, Asians, digits, lookbacks, reset call and reset put, call spread, put spread, only ups, only downs, and more. Okay, but with this channel we'll not deal on all of this, because some of them are not necessary and they're not profitable. But the ones that will dwell on more is up and down, touch or no touch, digits, reset call, reset pull, call spread, and call, ups and downs. Okay, so now for synthetic indices, there are still some categories that are made on the synthetic indices. Now we have continuous indices. Okay, now continuous synthetic indices, you choose from the volatility 10 1s index, volatility 25 1 index, 51 index, 71 index, and 101 index, and that is the 1s. Okay, and also we have volatility of 10, 25, 50, 75 and 100. So you'll find that the difference between 100 index and 101s index is this one is volatility is a little bit faster than this one here. Okay, and you'll just see in video under how you can trade on any of the volatility according to the market situation that is in. So this indices corresponds to simulated markets with constant volatility of 10, 25, 50, 75 and 100 respectively. As we saw earlier, it mimics the real world market volatility and are available 24/7. So that is why you're told here that indices correspond to the simulated market. So they mimic, because it mimics the real world market, the real world market is simulated through this volatility with the constant volatility of 10, 25, 50, 75 and 100. So, and we have another category of synthetic indices which is called the daily reset indices. Okay, the daily reset indices replicate the market with bullish and bearish trend with constantly volatility. The bull market and the bear market indices start at 00 GMT each day, replicating the bullish and the bearish market respectively. So because we'll not look at the daily reset indices, because this one is also not profitable, we'll mostly deal with continuous indices, and you'll see it whenever we'll trade in those videos. Because after this series of videos, I'll show you step by step on how you can trade and how you can be profitable trading on synthetic indices and the forex market. So that is marks the last of our video, and when we meet again, we'll see another lecture. Okay, so if you're new to the channel, smash the subscribe button and turn on the notification bell, and you can also read step by step on how these things work here, and you can also rewatch the video if you don't understand anything. So see you in the next video.